All right, great perspective. Low conviction there for now. Let's find out where you do have conviction and get into your pro picks. Pro Picks is brought to you by ATB Financial. With over $100 billion in assets, ATB Financial is powering possibilities for more than 843,000 financial services clients. ATB Cormark Capital Markets is a leading North American investment firm providing holistic corporate and capital markets advice and full-service financial solutions. Visit atb.com/inthemoney for more information. Okay, so earlier in the show, we talked about Build Canada as an investment theme, and you said, well, I've got a stock that reflects some of the infrastructure spending and defense spending that is being undertaken by the Canadian government. So that brings us to your first pick, which is Calian Group. Definitely more of a play on defense. Is that right?
That's right. More than 50% of Calian business is actually defense and defense-related industries, yes.
Now, the market's kind of aware of that. The stock has had a really nice rally. Talk to me about how the business has grown as a result of this strategic imperative and where you think it can go from here.
Well, I think defense theme as an investment is one of the most obvious investment themes for me right now. And it's starting to be reflected in the Calian valuation. But I think there's much more to come. They have streamlined some of the segments reporting last quarter. And now defense and defense-related is more than 50% of the business. I think that business can have a higher margin profile. So I'm very excited about that. Calian is communicating that they intend to grow their revenue and EBITDA at 10 to 15% per year going forward. Those are their 3-year targets. I think those are quite achievable. And some, I think they can expect to see a multiple improvement as well for the company, given the multi-year visibility on the defense and related industries.
I think that's the debate around the stock right now. It's under $1 billion market cap, but if it goes up a little bit more, it'll become a $1 billion company. But it's at a record high and trading at a premium to its historical trading range. So when you're recommending it at kind of that record high, stock's already gone parabolic. What kind of multiple do you think is reasonable? Because I'm just looking at estimated, it's already trading at 20 times.
Well, 20 times earnings, I think for this type of business, given the visibility, is fair. And in fact, earnings are gonna keep growing higher. I think free cash flow conversion is going to improve quite a bit. It is paying a nice dividend as well. It has cybersecurity business. It has military training business. It is working with the NATO countries as well as Canadian military. I think this business can trade at 20 plus times earnings and probably can trade at 12 times plus EBITDA and should be expanding from that point on. So I don't see any need to reduce it because of the recent runoff. And it is indeed my top pick because the visibility of the business has improved tremendously.
And Ottawa-based, I imagine it doesn't hurt that Canada has said we're going to buy Canadian when it comes to their own supply chain.
Well, there's a buy Canadian and there's also investment in defense. Our defense budgets are growing at a very nice clip year over year. And there are a few companies in Canada which will benefit from that. And Calian is certainly in that list. They will be, and they are, direct beneficiaries of the booming defense budget in Canada, as well as in Europe for some of the NATO countries.
Another idea you've brought to us is bird construction. And this one has held up remarkably well, and it's off to a very strong start in 2026. What first introduce us to the company, and then what you see as some of the green shoots here?
Yeah, so Bird is a construction and engineering services company. 100% of their business is Canada. And this is the most direct Build Canada exposure I can think of among the companies that I have studied. They have a booming backlog. Over the past 12 months or so, the backlog is up by more than 40%. Also, the backlog is coming at much higher margin. So the margins are poised to increase. Also, the quality of the backlog is improving not only on the margin front, but also on the risk front. Now they're doing projects in partnership. They're not taking as much direct risk. So I expect them not to have as many missteps as in the past So you have a booming backlog. It's a build Canada direct exposure, margin improvement. There's going to be free cash flow conversion improvement as well. So you have all the right pieces in place for this company to have a growing free cash flow. And I think the multiple can expand a lot actually from the past as well.
So, when you talk about a company that has all these government contracts for government infrastructure initiatives, I think about, the headaches that are associated with that say an Atkins Realis is dealing with the Eglinton LRT and their other projects. Did Bird ever get swept up in that? And are you confident that won't happen again?
Yes, they had some issues in the past. It's a very small portion of the work they're doing right now. And at some point in the future, they're going to have some of those problems as well. But as long as it's within the small margin of the overall business, as long as it's manageable, it's okay. They're still taking the fixed contract work, but they're taking it under all types of assumptions and all types of safeguards in place, which have not been there in the past. So because it's, in my opinion, it is becoming a much higher quality business, I think the multiple should be very different from what it was in the past.
And you prefer Bird to, say, an Aecon, which also plays in construction, but I don't know, is that a real multiple? 157 times. I mean, it's had an insane run up.
Well, you have to look at the EV to EBITDA multiples for this type of businesses. Okay. That's a better comparison. I do like Aecon as well.
You do like it? Okay.
Yes. Aecon is not 100% Canada. They have a big US presence, and they also have a big nuclear exposure. So I do like Aecon as well. It's a great business.
For different reasons.
But for different reasons, absolutely. But they're both buy, in my opinion.
Okay, let's talk about your third pick. Interesting. Capital markets wealth management play, Canaccord Genuity. Most recent results were very robust. Not surprising. Capital markets is awake finally. And so is wealth management with markets near those record highs. Why do you like Canaccord here?
So Canaccord has been in the penalty box for many years. Right now, I think they're in the best position that I have ever seen this company, and I've been following it for probably 15 or so years. So the capital markets, for example, in Australia, absolutely booming. Investment banking business is great. In Canada, there is much more room for capital markets to perform. They have seen all the financings done by the gold companies, for example. These are coming at very high margin. In US, capital markets for them are just waking up. So that's going to be a bigger contributor, in my opinion, this year and going forward. So overall, capital markets is doing well and will do much better. Actually, geopolitics, uncertainty, high gold prices is helping them as it relates to the funding for the gold companies. And wealth management operations in Canada have done really well. In UK as well, assets are growing, and these are high quality operations. They're not going away anytime soon. What also excites me is that I believe Canaccord needs to monetize the UK wealth operations, and potentially in a very short order.
How would they do that?
There are several ways to do that. You can sell it outright to somebody, and there are all types of precedent transactions we can look at and try to evaluate how much this business can be worth.
Why do you prefer that they get out of it?
Well, Canaccord needs to control the process of monetization of the big stake they have in UK wealth. The timeline for them to do that is by the end of July of this year. After the July of this year, they're no longer in control of the process. It's a minority shareholder in that business that gets to control the process. If you're in the Canaccord shoes, clearly you want to be the one running the process. At the same time, I don't think you want to take it, to the last month or the last 2 months. So I think it needs to happen literally within the next 1 to 3 months. And this would lead to the big unlocking of the value for Canaccord. So the value needs to be unlocked. The stock is still very cheap based on the sum of the parts valuation. And this is a big part of the equation. There also has been a number of leaked press releases about potential bidders for those assets. And if you take a look at some of those numbers, you can come up with a potential sum of the parts valuation.
That you don't think is captured in the stock, even with the rally?
In my opinion, it's not. If you apply the multiples contemplated in those press releases, you can read those Reuters articles, you can see that there is quite a bit of upside to the stock price.
Am I wrong, or is there some sort of U.S. regulatory overhang on Canaccord as well? Is that material?
It has been in place for quite some time. They have allocated the capital to that. It's taken a bit longer to resolve that. That's true. I believe it's just a question of time. It has been an unfortunate, lingering matter. But I think it will be resolved, in a matter of the next few quarters, hopefully.
Do we know what it was related to?
Well, there was, let's say, some aggressive activities they conducted that regulator did not like. And so they have, in my opinion, properly provisioned for that. And once this is resolved, I think this can actually lead to a higher level of activity for the U.S. capital markets activity. So that's another optionality we have in our toolbox.
Okay, Calian Group, Bird, and Canaccord Genuity, the pro picks. Thank you so much, Andrey, for joining us.
Thank you, Amber. It's been a pleasure.